Hi,
How are
Chris.
you?
Good. Nice to meet you. Thanks so much for your persistence.
I'm sorry
And
that it took so long.
oh, that's okay. Hurry up and wait. We all need to be patient. Don't wait.
I know. Honestly, I've never used that the format to dial in, so I think I was doing it incorrectly the first couple times. So sorry about that.
No problem. In fact, I just want to show I have your revealing my identity on your blog page. So
Okay.
we share some things in common. We both came from, kind of a humble background, and I don't know
Right.
about you, from having seen my mother's struggle to raise us, I decided, well, I'm not going to do that. I'm going to become rich. So the markets attracted me. I went to the floor in Chicago to learn the commodity business, and you went a little different route. So why don't you tell our community a little bit about, and I do remember your first story is that after high school you had some money to invest and you wanted to put it all in Apple, but your broker talked you into buying two other issues instead of it all being in Apple. I'm sure he told you that it was smart to diversify, but I'm wondering if his agenda wasn't just to generate more commissions, at least more ticket charges for doing 3 trades instead of 1. Is that what you discovered? You with me? Chris?
Hello, can you hear me?
Yeah.
Dale, I'm sorry. Yeah, I just disconnected by accident and just dialed back in. You know what happened when I tried to connect the first time? It prompted me with a different number to dial in on, because I guess if you're going to be speaking, they want you to dial into a line that probably has a little bit more bandwidth.
Okay.
Since it's going online, I can hear you, I can actually hear you much better now than the dial in I was using before. So I think we're okay now.
Well, I just told your story about after high school, you went into a broker to buy Apple, and he talked you into buying three stocks instead of all Apple, and probably said, yeah, well, it's better to diversify. And it was probably because he would do more commissions doing 3 trades instead of 1.
Yeah, and also I think, the Qs had just started trading, so ETFs, in like 2001 were really just getting started. I mean, now there's ETFs. If some guy like eats a bagel in Belgium somewhere, there's an ETF for that. But back then, the Qs were kind of like, they were one of the very, very first ones. And
right.
So I imagine somebody somewhere up the food chain at AG Edwards was probably pushing them to get it sold as well. And so,
right.
Yeah, I went into his office. I said, look, I've been into Apples my whole life. I said, I know the company's doing horribly. Microsoft had just taken a 7% stake in the company to basically bail it out. And Steve Jobs had just come back to the company. So this was before really before anything that before OS 10, before, they had just launched this thing called iTools, which was like a very, very primitive version of all the iCloud software that they have now that they, and the whole media suite that they base their operating system on, and really, which was like the next operating system, which was the place that Steve Jobs went when he left Apple before he came back. None of that stuff had happened yet. And when he came back to the company, I was just so jazzed about it. And, of course, I'm like 18 years old. I walked in there with, I think, $1,700 in cash, and plunked it down on the secretary's desk and said, I want to buy some stock. And the woman's like, you got to go get a check. You can't just walk in here with $1,700 in cash. So I was like, okay.
Yeah,
so I went
they thought you were money laundering into Apple.
Yeah, exactly, right, at 18 years old in suburban New Jersey.
Yeah.
So, so this guy, I mean, he looked just like you would expect an A.G. Edwards broker in his mid-40s in New Jersey to look like. And I said, I want to buy $1,700 worth of Apple. And he was like, no, you don't. He's like, Apple's garbage. He's like, you want to diversify. So I wound up buying Sun Microsystems, which, Java was just kind of in its infancy at that time. And I was buying, what else did I buy? I bought Palm, which of course went to zero or something close to it. And I bought some Motorola because they were actually manufacturing Apple's chips at the time. So I thought maybe I could kind of get an end around on this guy. But yeah, it was a great learning experience to trust my own instincts and not listen to anybody else.
Yeah, so good. Your first experience, you had to become self-directed. So what did you do after? What did you do after that?
Well, to be honest, I just started. I was in school at the time, so I went to university, and I really didn't have a lot of money while I was going through university. So what little money I could scrape together, I was working usually one or two jobs at all times between the time I was 18 to now, and I would scrape together a little bit, $1,000 here and there to just mess around with. And, instead of just saving the money and putting it into stocks and leaving them be, I started to experiment with everything, really, options and, futures. And it was an interesting time because everything was kind of shifting online. Back in 2000, 2001, there were still open outcry pits. And so, the whole transition to digital hadn't happened yet. And so, I basically just lost money for years. I played around and, learned about options the hard way, learned about Forex the hard way, learned about futures the hard way, learned about, equity valuation and all of the things that you need to have an understanding of how to be in the markets. I'm still learning to this day. But I learned a lot of lessons the hard way, and I lost at the time what was, a significant amount of money for me. Seeing as how I was just bartending and, just scraping by. And eventually, as I continued to do that, I started to wise up a little bit. Maybe 10 years ago or 8 years ago, I really started to, get a little bit more of a grasp and an understanding, because I went to school as an English major, and, I have a master's in organizational leadership, which, has a financial element to it, but I never went through any type of intensive financial education. So I had to learn everything on my own. I learned equity valuation. I learned, how to do discounted cash flow. I learned how to read financial statements. And then, probably like 5 or 6 years ago, I went to go work for a small company that's now, basically defunct. But I was working investor relations for this little startup company that was listed on the over-the-counter markets. So that experience gave me a lot of time sitting with the CFO and sitting with the securities attorney, writing a lot of filings, going through the annual reports, page by page, line by line, word by word. And that was a pretty intensive experience that was very helpful in getting me to have a much clearer grasp of public reporting and what companies are expected to report. And so really, it was a combination of learning the hard way and kind of getting into the inner workings of a company that was doing some public reporting, which helped out. But and then eventually over the last year or two, I did some courses at Penn in finance. I'm really trying to round out the financial angle of my education, which is probably, I would say, one of the weaker parts of my background right now. I've always been a pretty good investigatory journalist. I've always been a good writer. I've always kind of been able to sniff out bullshit pretty well. But the financial end of things and the forensic end of things financially is really what I'm working on developing now. So
okay,
it's been a long string.
You tried almost everything. You said options, futures, Forex. What do you do now? What did you gravitate to after having all those experiences? Do you trade? Do you advise? Are you mainly an equity guy now because of your experience of being an investor relations person? What's your focus now?
Well, for the most part, I focus on equities and options now. But it's nice having the tools and having the wherewithal to understand the futures market, understand the currency market, because, at some point, you're handed opportunities, whether they come, you know, at 7 o'clock on a Sunday when the stock market isn't open, or if it's, you know, if you want to get a pure play on crude or something, as opposed to, you know, buying and selling a company that deals with crude oil, or you want to get direct exposure to gold, which is probably, you know, one of the futures that I trade probably the most often. If you want direct exposure to that instead of going out and buying, you know, GLD or one of these other instruments that's listed on one of the equity markets, it's nice to have that accessibility. But I mean, as I was saying about ETFs earlier, there's pretty much a way to play just about anything on the equity markets right now. You're just constrained by the time that the market's open. So the, you know, the futures market and the currency market can give you the action when the equity markets are closed sometimes.
Okay. So tell me about QTR. Why Raven? Why is the Raven your animal spirit?
That's a good question. I don't think anybody's actually ever asked me that, and it's really not a good story at all. As much as I'd love to have some great like explanation behind it, it was like 2012 or 2011. I decided that I wanted to write for Seeking Alpha, which basically I was just starting to do just to get some beer money on the side. It turned out to be an unbelievably powerful platform for getting my name out there, and especially for helping me learn. I mean, I read so much stuff on that platform as I was writing on it, but I wanted to sign up under a pseudonym because I was working at the time and I didn't want to use my regular name. So it wasn't like I adopted the pseudonym because I was, you know, I knew I was going to be going into short selling and I didn't want my name associated with my work. It was literally because I wanted to be able to write freelance without, you know, the people at my job or, you know, the shareholders that I corresponded with at my job to know that I was out there doing some freelance work on the side. So, you know, I was an English major in college, and that Edgar Allan Poe poem, Quote the Raven, or actually the poem Quote the Raven, was in my head for some reason at the time. And, you know, actually I signed up with Seeking Alpha over the phone. You do it online now, but I think back in the day, somebody had called me and said, you know, we want to get you set up with an account. What pseudonym do you want to use? And I was like, you know, I have no idea. So I just said, use Quote the Raven. And then that was it. You know, I expected it to be nothing. I expected it to be this thing that I wrote under for a little while, and then I would keep going wherever else I was going. But instead, it kind of turned into, you know, this name. And now people send me stuff with like ravens on it, and like, you know, my mother for Christmas bought me a notepad with a raven on it, and you know, so I've just kind of adopted it because that's what a lot of people know me as.
You're kind of like the Edgar Allan Poe of Twitter now.
Oh, I don't know if I'm that eloquent, but that's a compliment I'll graciously accept.
All right. So you know, you've been around the block. You've been doing this for a while. What's the landscape look like to you, Chris, with the market pressing record highs and all this geo stuff and all this domestic political stuff and the Fed, will they or won't they? What are you telling your readers about the environment that we're in right now and how they should, protect themselves or take advantage of things?
Well, I'm always of the, you know, I come pretty much from the Austrian mindset, and so, you know, Keynesian theory. Maybe I'm just not well educated enough on it, but it sure as hell doesn't seem to make a lot of sense to me. And so I'm kind of always of the mindset that, you know, owning things like gold and silver are, you know, it's not a bad idea. I'm kind of anti-Fed policy. It doesn't really seem to make a lot of sense to me. You know, I was raised in a household where I was taught to save my money, and you know, I was given a young savers pass book that they give, you know, the teenagers. You can go in, deposit your $20 and see how much interest you're making on it. And, you know, it used to be now you can check it online. It used to be like a physical register. And my mother is, you know, very fiscally conservative, and my parents had, you know, two, you know, I guess middle-class jobs. My mom worked at a library. My dad worked as a...
So you're probably, let me guess, you're probably worried about elevated levels of equity prices.
Oh my God, yeah, absolutely. The point I was trying to get to though was, because of my parents' frugality and because of my mother's financial acumen and her her Austrian mindset with our personal balance sheet. I was able to be raised in a household where we always had food on the table. We always had a vehicle to get around with. We were able to move from a smaller house to a moderate-sized house at one point during my upbringing, and my parents, have done that just through the basics, which is not overextending yourself with too much debt, not taking on obligations that you can't handle, finding prosperity in saving money. And so that's kind of how I was raised. That's why it's easy for me to adopt the Austrian mindset, and that's why really nothing that the Federal Reserve does makes any sense to me.
Isn't it? Completely out of fashion.
What's that?
The Austrian mindset. Now it uses as much leverage as possible, take as much risk as possible.
It's ridiculous.
Okay.
I mean, equity prices are so expensive right now. I mean, the thought of the fact that we are 10 years into a cycle where the Federal Reserve has made money so cheap that every company that you pull up, whether it's Coca-Cola or it's Microsoft, or, God forbid, it's one of these specialty pharmaceutical companies. Basically, every company you pull up, is going to have a fair amount of debt. Many companies are starting to get into territory where their leverage ratios are starting to come up a little bit more, and they're taking this cheap money and they're buying back their stock with it. And, that creates a problem down the line at some point.
What do you think could be the catalyst or the pin that pops a bubble? What do you see out there that worries you?
What worries me is the fact that the central banks are going to try as hard as possible to stop any bubble from bursting. I don't know what it's going to be. I don't know if it'll be, it could be anything. It could be this North Korean thing. It could be student debt. It could be, it could be household, credit card debt. There's a bunch of bubbles out there. What worries me the most is that, the central banks are going to try and do everything possible to prevent any type of bubble from bursting. And we've seen over the last 20 years, we've really gone from markets that had been allowed to correct here and there to, what we've seen here over the last 10 years with, Brexit happens and all of a sudden the market, is back up. When Trump is elected and all of a sudden the market's back up. So what's frightening to me is the idea of a currency crisis, which gets laughed about a lot if you bring it up at a table full of suits on Wall Street.
Okay, a currency crisis in the euro or in the U.S. dollar?
In the dollar.
Okay. Okay, so maybe losing the reserve currency status, petrodollar, etc.
Yes and no. I mean, I know it's unlikely, but it just ideologically doesn't make a lot of sense to me. And maybe I just haven't bought into the system enough, and maybe I'm too much of an outsider. But to me, growing up, my mother would always say, if it doesn't make sense, it's probably not true. And, depegging the currency from any type of resource, we used to have the dollar was tied to gold, and so the dollar became the reserve currency because it was backed by gold, and then all of a sudden we depegged it from gold, and we're still the reserve currency. Why? Well, that's a great question. At that point, it becomes somewhat of a confidence game, right? And we're a country that's $20 trillion in debt right now, and the only way that we can continue to service our debt as a nation is by essentially, the dollar depreciating and the dollar losing purchasing power. Otherwise, we would have a real problem even servicing the debt, let alone paying it off. And so, it's how far can we push this Keynesian bubble out? It's been
you never know how far a rubber band can stretch, do you? You have your head wrapped up. Can you wrap your head around crypto?
Yeah, I've actually I've looked at them a little bit. I own a little bit of Bitcoin. I can see the case for and against them. And I haven't really, I think what's going to happen is I think they will appreciate in price just from a supply and demand standpoint. The one thing that I like about, Bitcoin, for instance, is that the Federal Reserve can't come in and print more of it. So you have some Bitcoin that, will be on issue, and then that will be it. The supply side of the equation is pretty much locked in. And it doesn't really matter whether it's Bitcoin or whether it's tulips or whether it's an equity or whether it's, cans of tomato sauce at your local grocery store. If the supply ends somewhere, and that starts to kind of create this narrative of get it now while you can before the price continues to appreciate, that can be a pretty powerful thing. So people that speculate on Bitcoin, I find, either saying it's going to go to zero or it's going to go to $500,000 or whatever. I find both of those things fascinating because it's pretty much impossible to really try and put a finger on how high it will go or how low it will go. I don't see it going away anytime soon, but with that, it's extremely volatile, and I own a little bit, just basically as a lottery ticket.
Yeah, because if you use it at the grocery store, if you went from one aisle to the next, in 5 minutes, you would know if you had enough to buy things. So,
exactly.
Or you could buy a lot more.
It's ridiculously volatile for a currency.
Yeah. So let me ask you this. I did notice at the bottom of your page that you're on Ackman's side, that Herbalife is a Ponzi scheme. I don't want to get into Herbalife, but do you think all network marketing?
You're talking to the wrong person then.
No. Well, I just want to ask you if you think all network marketing is a Ponzi scheme.
Yeah, it's actually, people kind of convolute Ponzi scheme with pyramid scheme. They're both, types of financial fraud. They're a little bit different in nature, but similar in some regards. For the most part, I do. I think the multi-level marketing model is a disingenuous way to do business that preys on people that don't have any type of, financial sophistication to understand the intricacies of how their business model works. I've met with, over the last 4 or 5 years, many people who have been involved with many different multi-level marketing companies. They exist, as far on the gray line as you can get of being a legal business model without crossing it, I guess. If the FTC didn't want to come out and use the word pyramid scheme, but they sure said a lot of horrible things about the company in their complaint about it. And anytime you can have a company that rips 80% margins and generates a lot of cash, has fantastic quality of earnings and is able to, rip those huge margins, you have one of two things going on. They either have an unbelievable moat and an amazing product that nobody else has been able to, come up with, and you have a great, beautiful organic business that has, just basically found the mother lode somewhere with whatever product or service they're offering, or you have like these network marketing companies, which are companies that offer products that are, for the most part, commodity products that you can get basically anywhere else. I mean, you can get equivalents of Herbalife's products for cheaper at GNC and other places. And then the question becomes, well, how do they rip these huge margins? How does a company like that that's selling a product for a premium to what it's selling for at a place like GNC wind up making 80% margins? And the answers lie in how the business model is structured. The closer you get to running a fraud, the easier it is to make amazing margins. I could make 100% margins if I tell you I'm going to get you a Ferrari for $50,000 and you give it to me and I just don't return a product or service to you. I mean, that looks great if you're looking at the operating margin line on my personal balance sheet. But unfortunately, when I fail to deliver the product to you, you start to realize that maybe those margins are that high for a reason.
I tell you, you are a voice in the wilderness for a lot of people. Really glad I reached out to you, Chris, and you bring sanity to a world that's so full of sharks and barracudas and misinformation and hype that I think just for balance, people should follow your writings and Your Twitter
so much.
handle is at QTR Research, which and that's also your website. Is it www or it's a blog or what? What's the best way?
quotetheravenresearch.com, and I also write for a company called Geo Investing, which does a lot of like similarly like-minded boutique style research. What we call it basically hedge fund quality research for the retail investor. We're trying to just do the same thing, which is inform people that are maybe on the retail side and kind of pull the curtain back a little bit for them and give them access to some high quality research on companies that either may not be covered on Wall Street or may not be covered in what we believe to be an objective fashion. And so, yeah, my Twitter handle is at QTR Research, and then you can also follow at Geo Investing. It's GeoInvesting. And yeah, it's great talking to you. I hope I can come back on sometime and we can do this shit again.
Yeah, where are you at? I'm showing your picture. Where are you? In Europe? Where is that?
Oh,
on your website.
That's in Italy. That's in Florence, actually, at Ponte Vecchio.
Okay. Were you on your way to talk to Mario Draghi about what he's doing?
No, I was on my way to a bar.
I thought either the Pope or Draghi you were there, but yeah, you like bars, so maybe one day we'll have a chance to raise a glass together, Chris.
That would be nice, man. That would be nice.
All right, great meeting you, Chris. Thank you for your time today, buddy. And
thank you so much, Dale.
And thank you for educating the people that may be a little bit on the naive side, so they don't fall into the same traps and landmines you and I have stepped on.
Thank you so much again. We'll talk soon.
Okay, Chris.
All right, bye-bye.
Everybody. If you're still here, Steve, I want to test your mic before I say goodbye to everyone. So let me get you up here, Steve, so that next time you're good. Everyone, Steve Walker's here. We had some technical issues yesterday. There he is. So I'm just going to make you a panelist, Steve, and that way you could test the mic and see if it works, because you're coming back on the 18th. Try it.
Hello,
I hear
Dale.
something.
Yeah,
I hear you. I hear you,
okay.
Steve.
Okay, good. Good.
Okay,
It was unfortunate yesterday. Yeah, I don't know what happened with the PC, but that one is better.
Okay. Well, then we look forward to speaking to you in a few weeks. All right, buddy? And F.A.C.E, thank you for your attention today. You're welcome, Mike.
Right.
Thank you, Blake and Steve, and we'll see what's going on. Maybe Nick or Greg might drop in the next couple days. So good luck on your trades, and don't forget to sign up and take a subscription. And down the road, Blake's going to be opening that up. And come back Friday, we'll announce the winner of who guessed the closing price of the euro. We'll either do that Friday or Monday for your T-shirts. And most of all, don't just count your pips, count your blessings. And see everyone mañana. Thank you. Thank you, my trading warrior brothers and sisters. And Steve, nice to hear your voice. Look forward to talking to you in a few weeks.
Okay, thank you.
All right, Steve.
Bye-bye.
Bye-bye. And thank you, Chris, if you're still here. If not, everyone be worth following Chris Irons. See everyone tomorrow.